It was 5 years ago this month that Google went public. A lot of naysayers at the time thought that the stock was expensive at $85 a share. Never mind that it has risen more than 400% since then. And consider this, during that same time period, the shares of its rival Yahoo, they've been cut in half. Okay, Google, Yahoo, technology. Let's see what the next 5 years will bring. We've got Colin Gillis. He's a managing director, a senior analyst at Brigantine Advisors. Colin, good to have you with us. Thanks for coming in.
Pleasure to be on.
Do you remember where you were 5 years ago when the Google Dutch auction IPO happened? It was really at 35. It closed at 85, but didn't it come out at like $35 a share?
It closed at $85, yeah. And I mean, the Dutch auction process, sort of allowed investors to bid up the shares. Now, the key thing is it's been a tremendous 5 years for Google, right? What are the next 5 years going to bring us?
All right, so what do the next 5 years bring us? I mean, do they just bring us faster search, better search?
Certainly that, right? If you think about one of the things that Google's built on, it's built around trying to please the users, right? And they're all about, the users are our core audience, and they're constantly improving their search. People may not realize this, but, they do about 100 search improvements every single quarter. Now, most recently they came out with what's called Caffeine. They released that out in a beta format for people to test. That's a faster version of the search algorithm. It's pushing results out a little bit faster. Most users are not going to see a big difference in the Caffeine search process. But, the reality is that Google's always trying to deliver you the results that you want quickly and efficiently.
When you talk about the company as being a search engine, I mean, even when we talked about the 5-year anniversary, okay, Google coming out being the big search company, it's really an advertising company. It's an advertising delivery company. It delivers ads to people.
Absolutely. There's no doubt. That's the revenue model, right? But the utility that they provide is organizing the world's information, and that is their motto, right? And by focusing in on delivering relevant results, they always want to deliver you this one beautiful targeted ad. Now, along these lines, they're looking to expand into multiple categories, right? You've got the Google browser called Chrome. You've got the Google operating system, right? Also called Chrome. You've got they're trying to reinvent email. They're saying, what if we could do email all over again from the start? That's called Wave.
Applications that you can also get online, right?
Certainly, applications that are store your documents in the cloud that go head-to-head with Microsoft, and then Android, which is an operating system for the mobile phones. And excluding the applications, those other items, Wave and Chrome and the Chrome browser and the Chrome operating system and Android are all open source, right? Which means that they're available for anyone to use for free. So this is not really a great business model. You look out 5 years, unless it drives more search volume, it increases innovation on the web and makes the pie bigger. That's what Google's hoping for.
Is that going to happen in the next 5 years? I mean, we're going to be walking around with mobile devices that give us that kind of capability, and then we get delivered that targeted ad, which Google then reaps the rewards from?
Certainly, right? Especially when you add in the fact that there's geolocation ability, right? So that you can see where you are at any given instance, so you can even improve the targeting to, hey, Colin, you need to buy pants. Click here to go to the store right around the corner for you. So, that component is certainly real. And certainly we want to increase the volume of searches that we're going to be doing across not just our desktops but on our mobile phones. That's the bet. But we could also look back and we could say, Google is a one-trick pony, in 5 years from now, and that all they really were good at was search, and that all these other business units that they expanded and put money into, they never got major traction.
Do you buy that though, or should you be buying the stock? I mean, okay, if you bought it 5 years ago, you'd be very happy. Do you think if you buy it now, you'd be happy?
Yeah,
in 5 years?
I do, actually, right? So this is the thing. You have to ask yourself, could Google be a $1,000 company, in the next 5 years? And it's really not that out of the question to see how they could get to $40 billion in revs, by the end of 2013, maybe $40 in earnings. You put a 25 multiple on that, that's a $1,000 stock. It would probably be about a $300 billion cap. So we're talking, a tremendous company. But if you think about, the pool of dollars that are available total in advertising, and advertising is online is still 10%. There's tremendous room for them to continue to grow, and certainly the internet as a medium is only growing. Right? We're still very much in the early days, even though it seems that there's been a lot of evolution over the last 5 or 10 years.
What about content, things like YouTube? Are they going to be able to monetize that, or does that not really matter in this whole scenario?
So, on the content side, right, they're not creating it. They're relying on user-generated content and also their partners. Well, I think what we've found out now is that user-generated content doesn't really monetize all that well. People aren't going to sit through a 30-second ad to see a cat on a skateboard, or Diet Coke and Mentos. But they are going to sit through some ads to see professionally generated content. And what they've done is they've actually they're pretty proud of the fact that they've tripled over the last year the number of monetized views per month that they're serving up, right? And it's actually now over, they're serving, they don't break out the details on YouTube explicitly, but they have told us that they're serving billions of advertisements per month now. So that's a big positive for YouTube, and certainly it's calming down some of the complaints about the costs. Plus, the new CFO has been put in place now, coming up on 1 year. It's this gentleman named Patrick Piché, up from Canada, and he's done a tremendous job on cost controls for Google, right? Even though the top line has ground down just to 3% in the June quarter, they've done an excellent job of expanding their margins, increasing free cash flow. I mean, $1.5 billion in free cash flow in the June quarter.
All right, you like Google. You're saying, yes, it's something you need to buy. You'll be happy if you did so in 5 years. What about Yahoo? Is Yahoo an independent company in 5 years?
Oh, wow. I certainly hope Yahoo is still around. The problem with Yahoo is it's a long road to reinvent itself, and we need to see some of this wow technology, take place, and I haven't seen it happen yet. So the way I look at Yahoo right now is, think about the new CEO, Carol Bartz. So she's come in, she's addressed the search issue. That was a bit painful. She's leaned on the sword, signed it off, said we can't compete. Let Microsoft have it. Now the next piece is trying to probably carve off some business units that don't really make sense, whether it's Hot Jobs or Yahoo Small Business. So in 2010, it's very likely Yahoo could shrink and be smaller than in 2009, right, as they get rid of these units. Now, she's going to reinvent herself, and hopefully they can see some growth coming up in 2011.
All right, 2011. We've got to wait a while to see any kind of results. All right, I want to thank you very much, Colin Gillis, Director of Research, Brigantine Advisors, giving us the lowdown on what's up in technology. Appreciate it. Thank you very much.